Joining us now to discuss the crypto markets is Octavio Marenzi. He's CEO and founder of Opimas, a management consultancy focused on global capital markets. Welcome back, Octavio.
Thank you so much.
Glad to see you. So now, it's of course an interesting day. We had Bitcoin break above $23,000. We've seen it rally from about 17 over the past few days, it feels. What do you think is the catalyst? We've heard all these rumors about, let's say, I don't know, certain large players maybe pushing the price up purposely. Is that something that's really happening, or is there a natural reason why crypto, particularly Bitcoin, is rallying at the moment?
Well, I think I like to see it in terms of what the Federal Reserve is doing, what interest rates are doing, what the money supply is doing. And what people have been looking at, the Fed has basically jacked up interest rates about 4.25% last year, and seems to be starting to run out of steam a bit in terms of increasing interest rates. And so some money is starting to bet that the Fed is actually going to reverse its course and pivot, as they say, and start to actually lower interest rates again sometime in 2023. And that is going to be very favorable for Bitcoin and gold and other assets.
So, of course, we have the Fed coming up with a meeting in a few days, and right now the market is probably thinking about, let's say 25 basis points increase in the Fed funds rate. Do you think that that's what's going to happen, or are we going to continue with the 50 basis points that we have seen? I know you've said that there might be a potential pivot. I personally, I'm going to disclose my bias. I don't think that's happening anytime soon. But nonetheless, do you think that they're going to kind of go with market expectations and sort of taper, if you will, their increases to 25 basis points, or will we see surprise 50?
I think it's pretty certain at this stage we're going to see 25 basis points increase. The Fed officials themselves who sit on the committee have signaled this quite clearly. The most hawkish members have basically said we're looking at 25 basis points. So market expectations, to the extent they really have any independent expectations, are exactly in line with what the Fed itself has said, which is no big surprise. Now, I think I agree with you that longer term, and by longer term I mean a few months down the road, they're going to carry on increasing interest rates, that inflation has ended up being more stubborn and higher than they ever thought it would be, and that probably is going to continue into 2023. So we're going to see more interest rate hikes. But I think there is this rally in the market, in particular in Bitcoin, because there's a sense by many market participants that we're going to return to easy money, and that is very good for Bitcoin and very good for other asset classes as well.
That's what happens when you have a bunch of people who get in the market who aren't old enough to remember, days when rates were higher. Christine, sorry.
Well, Bernstein is out with reports saying that the recent crypto market strength is probably driven by a reversion to mean values, which is a theory used in finance that suggests asset prices tend to revert to their long-term mean or average level. What do you think about that, Octavio?
Well, I think with something like Bitcoin, it's particularly difficult to say what the mean level it would revert to might be and what time period to look at, right? So
$69,000.
$69,000, of course, that's exactly the mean that we're going to revert to. So I don't know what the mean reversion actually means. Yes, at some stage you look at what the actual asset can generate in terms of cash flows, and that is, of course, very, very difficult with Bitcoin and other asset classes like that. So I don't agree with that hypothesis. I suppose you might make the rather sort of cute argument that it's worth as much as the next person is willing to pay for it, and that's really what's going to determine where it ends up. I think that's almost saying the same thing there. But no, I think Bitcoin in general has been seen as a hedge against central banks getting carried away and printing too much money. And as they start to look like they might be tempted again, the Fed officials might go back to the printing press and start printing more money again. Bitcoin does well, and NFTs as well, and other things like that also doing well as a result of that, because there's at least the possibility that we're going to return to this really easy money.
So let's move on to another topic in the news. Signature Bank, they will not handle transactions of less than $100,000 worth of crypto for exchange customers, according to a statement from exchange giant Binance. Does that present some complications in the industry?
Well, I mean, it represents complications, I think, for Signature Bank clients who've been using Signature Bank's system, Signet, to get money into crypto exchanges and using that to get their cash into crypto exchanges and convert it then into Bitcoin at the exchanges. But not really. They'll find other ways to do it. But I think this is more reflective of Signature Bank's own positioning here. Bear in mind that their stock price has been absolutely pummeled over the course of the past year. It's down about 60%. And there's no real reason for that. It's actually a pretty well-run bank that's quite profitable. 2022, they just reported their Q4 earnings was actually really good for them. They had a good year. They had a good last quarter, maybe a bit down from the third quarter, but still up year on year. So quite impressive results. But they've been tarnished by being a crypto bank, or at least being seen as a bank that facilitates crypto payments. In reality, I think they hold next to no crypto assets of any sort. They basically hold dollars and loans, and in many ways just sort of a traditional bank that also facilitated payments into crypto exchanges. So they've been keen to distance themselves a bit from this, at least in terms of marketing positioning, things like that. And I think they're taking advantage of this to say, we don't really like dealing with payments under $100,000. These pesky retail clients, they call us in the call center, say, where did my money go? I sent $50 into Binance. It didn't arrive. Can you follow up with it? And so banks like this are always very keen to get rid of those pesky retail clients who have very small balances and very small transaction amounts and focus more on the large ones. So I think they're trying to kill two birds with one stone. One, get rid of those unprofitable clients, and the other, give the market the perception that they're moving away from crypto entirely.
So on that second point, do you think that they'll be able to do it? Do you think they'll scare off or at least calm down the short sellers and the like into saying, okay, you know what, we're not this, or do you think that it's forever going to be pegged as a crypto bank? It was, to be honest, something that they were very vocal about being months and months ago when everything was, when prices were at 69,000, when things were exciting, they were more than keen to say they were all the new economy, et cetera.
How the great have fallen. Yes, I mean, absolutely. When things were going well, they were all about crypto. Now that they're going badly, they're all about doing the opposite. But when you really sort of pick apart their balance sheet, it's a pretty traditional bank. It doesn't really have much crypto exposure, if any at all. The only thing that you can say it has is sort of what they refer to as crypto-related or linked deposits. So they're basically saying a large amount of our deposits come from people moving money in and out of crypto exchanges. And so that is what they basically said. We did a lot of business in that domain, got a lot of deposits from those kinds of clients. But really, it's not a crypto bank. It's a traditional bank that basically facilitates payments in the way traditional banks do. And so they set up a slightly easier way to do that than other players. But by and large, if you take apart their balance sheet, it looks very, very much like a traditional bank. And I think their stock price, first of all, went up undeservedly and now has come down undeservedly. And as a result, they're trying to distance themselves from the whole crypto space.